Hello, and welcome to another update video on XRP. We are dealing here with the larger time frame at the moment. And yeah, on the larger time frame, what we are tracking here at the moment is a sideways consolidation pattern. Okay, it's really just a sideways consolidation pattern at the moment within a support range that's defined between $1.21 and $1.55. Yeah, so we've got here these two levels that really matter from a larger time frame point of view. The price is comfortably holding within this range. Okay, so we already talked about the support area and the upside breakout point. I would say this is the upper boundary line. I mean, that's located around $3 and oops, that was the dog. That's around $3.30. So this would be the breakout point to the upside that we need to overcome, key resistance. And we are basically just moving in between and not even with a lot of volatility at the moment. Yeah. Now, today we have some short-term upside, which is interesting. So we've broken actually above the initial micro resistance level. That's getting interesting now. So once we get a break above initial micro resistance, it's typically an indication that for now at least the bulls seem to be in control. But we need to make sure that it's not a trap. Okay, so I think we take a look at the shorter time frame now. Before we do that, for those who are new, at the moment the thesis would be that a fourth wave bottomed in April. Okay, that we are in a fifth wave to the upside. That's the thesis because we have a so-called 5-wave move to the upside into the May high. Or what is that? The 12th of May high, I think. And now we're dealing with a pullback, with a correction. And that's definitely interesting. So what we're tracking here at the moment is a potential upward move in wave 5. And this should be in itself a 5-wave move. And after an initial rally, this pullback could be an opportunity and act as a jump-off point for the next move to the upside. So let's take a look at the shorter time frame for XRP. We have, as I said, a potential 5-wave advance from the April low. 5 waves up into the swing high here from the 12th of May. It's a bit of an ugly one. It's a diagonal pattern, but it's fair enough. It's fine. It's an ugly one, but a lot of coins show a similar structure. And the pullback so far is clearly corrective in nature. It's quite a nice 45-degree angle. We have overlapping waves. We don't have really impulsive price action. I like the look of it. It's messy, but that's exactly what corrections are, and that's why it's good. So if we have a correction now, then we would expect a reaction to this area. Yeah, we've already reacted to it. But the reaction is not large enough. It's only a 3-wave move up. And so we don't have evidence yet that we've bottomed, but what we want is a reaction to this area before the price breaks below $1.79. So we want to get a break above that previous swing high here. These swing highs, 29th of May high, and we want to get a break above the 26th of May high next. So a break above the green line would be amazing. These two signal lines here, that would be amazing. If we zoom in a little bit, we can see that this here is a 3-wave move up only. So it could still technically be a 4th wave if we're dealing with a diagonal pattern to the downside, because we have an A, B, C. Now, we talked about this target area, right? That's been reached. So that's important. Target area is always more important than the microstructure. $1.96 to $2.07. The reaction happened to one of the fib levels, but I have to say the downside move doesn't technically look full. So it would technically look better with one more low, but I have to say with a break above micro resistance, we're now kind of in no man's land. So when we get a break above initial micro resistance, it can be an indication that the bulls want to drive it higher more directly, right? However, is it a sustained breakout or not? So again, there is a risk that it's just a trap. There really is a risk that it's just a trap. It's a 3-wave move up so far. So with the risk being it's just a trap, what do we need to see for a first real confirmation a low is in? Well, we need to see 5 waves. So the place from where the recovery started is okay, but it didn't technically look complete because the C wave only has 3 waves. Ideally, it would get 5. So next support levels are $2.03 and $1.96 if we get another low. At this point, another low is very likely, but if we get 5 waves up, I'm going to start to look for higher prices. I think that is a good strategy because it keeps us safe. If we have 5 waves up, we can add the next support area, and then the risk of another low reduces. At the moment, you could say the risk might have reduced for another low because we have broken above initial resistance, but it's not substantial enough. It's kind of no man's land, bit 50-50 now with a break above resistance, but not the ideal structure. But if we get 5 waves up, we also have the right structure. So that's what we're watching for in the next maybe 24, 48 hours. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.